Welcome to Markets Now. I'm Michelle Rook with Mike Miner with Professional Ag Marketing. We are seeing livestock futures mostly higher here as we roll through the mid-session. Grain futures are seeing some mixed trade, and I want to start off with soybeans, Mike, because soybeans down today. We failed to close above the 100-day moving average yesterday, and we're seeing a little bit more pressure here today, aren't we?
Seeing a little bit more. And when I look at some of today's news, rumors of China and they're canceling a of Gulf soybeans this morning put a little bit of pressure on that market.
Yeah.
But it's that time of the year too, early harvest lows. We're not catching a whole lot of bulls in this camp here recently, are we, Michelle?
No, we're not. And, let's talk about some of the reasons for that. Obviously, we have, tight ending stocks at 220 million bushels. But, you and I have talked about the fact that low Mississippi River water levels and exports, obviously running behind last year's pace, right?
Yeah, I think the soybeans probably have more of a bearish export outlook with the recent reports compared to corn and wheat at this point. Corn and wheat, they're doing pretty much what they need to from a seasonal perspective on exports right now. The soybeans are the ones really lacking any further progress on export activity. And when we look at some of the basis levels, particularly corn out in the eastern corn belt, Ohio River, you're starting to see that really weaken this week. Seeing basis levels really pull back, and we're seeing some lower water levels and things like that. But at the same time, our friends down in South America continue to make significant sales to China on soybeans, and I think that's been really discouraging, especially with the path that our US dollar has taken. It's making us really non competitive in the global export market. And from the Fed's hawkish news last week, I mean, we could see that continue, right, Michelle?
Yeah. All great points, Mike. And probably the pullback in soybean oil is not helping that market either this morning. What about
No.
corn? We have
To
been
to
pretty
build on that soybean oil
okay.
part though, you
Go ahead.
mentioned, board crush margins have dropped to new quarterly lows. So that's something I want you to watch, Michelle.
Okay. Yeah, I know those crush margins have been just out of sight for a long time. So that's a
Yeah.
big part of that. So the corn market, as I mentioned, we're kind of sideways there. We've been in a pretty narrow trading range. Do you anticipate that to kind of continue here, Mike, or what are you watching?
Yeah, and I think corn's going to be really hard to figure out what yield prospects are out there this year. We have a wide variety of yields, no matter where you're at in the United States, and even within the fields. Big change in moisture within the field, big change on yield. So it's going to take a while to figure out the trend on this corn yield going forward. And as we get further into it, it seems like the most recent reports we've had have been a little bit better than expected yields. And not saying that we're way above APH or anything like that. It was just above expectations, especially in some of these poor areas. So we're gonna get some drier weather here, which should help out harvest. Weather's really picking up today. I mean, we're in the 80s again here now for about 5 straight days in this part of the world, and that's going to help some harvest progress. But I think one thing we did see this week, which was a little bit out of the ordinary, was a lot of Brazil weather talk. They've been a little bit drier, and now looking forward, they started talking about some of the rainfall activity that could be projected on that area as well in the south. So I thought it was interesting how I think the trade actually acknowledged some South America weather this early on, Michelle.
Yeah. So this is like the 50 in a row, though, that corn has been higher. Do you think a little bit of this, Mike, is into the quarter, like short covering? Because the funds are still really short in that market.
They are, and I think crude oil's given it a run for its money right now. When you see crude oil advancing over $95 on the WTI now it really gets corn talking. And you saw ethanol margins post near record highs again yesterday in most of the reports. So when I see ethanol doing what it's doing with huge margins and seeing crude oil as high as it is, it's going to be hard to keep support away from the corn market, and especially after holding this 480 area for a while now, I could see some money flow. Maybe say, you know what, maybe let's get our shorts back out of this corn market and just see where we could have this thing take us over the next couple months.
Let's move over to the livestock futures. Cattle seeing a little bit of a technical bounce here, it looks like today, or what would you chalk it up as?
I would call it that. And really looking back, I'm comparing it to Tuesday and the awful selling pressure that we had on Tuesday. And I wasn't surprised to see that pullback on Tuesday from record highs as the large position held by funds were kind of leaving the market vulnerable to long liquidation. So that made sense that we
Mhm.
saw a little bit of a pullback after those higher activity range, or the activity at the higher end of this range after the cattle on feed report. So we got that report behind us, and the bulls stayed in it. Not a whole lot to move the market, and then they pulled back out this week after they had that opportunity to see the report. So I think another factor worth watching in that cattle market and the sell-off was the equity markets. Traders are becoming more concerned about their about demand going forward. And you've got two camps. You've got a camp that's focused on household budgets and seeing where the economy is going and the worries about box beef values and the lack of advance there recently. So that's one bucket, and what could be. The other bucket is just basically focused all on supply and our dwindling cattle supplies and our cow herd for the longer term. So you've got two different camps that are looking at two different things, and one is the buyer and one is the seller, obviously. So we've got to try to meet in the middle somewhere, and cash hasn't really moved or advanced too crazy here recently, but seeing that pullback and seeing a little bit of a bounce today, just back up to the top end of the range, recapturing what we saw on Tuesday. I don't see anything other than technicals holding that upper trend that we've seen recently, but it did show me one thing: we haven't been very volatile in the cattle market recently. Even in the last year or so. And yesterday or Tuesday's sell off was a pretty sizable move for that contract, and today to recapture it, maybe that means that we're going to get a little bit more volatility back in that cattle market.
Yeah. The other things I might point to, you mentioned cash, steady in the South, 183, the North maybe a little bit lower, but the market not necessarily negatively reacting to that. And then it seems like every time choice boxes get below 300, we get some pretty good buying there. I don't know if that kind of helps shoot the market up a little bit here today or not.
Yeah, and most of the cash isn't going to happen until Thursday,
True.
Friday, anyways. So I am curious to see what cash does here tomorrow. One thing worth following on cash has been that tightening of the spread between the South and the North. That has come together a lot more as well, which for a while there, it was getting to be a pretty big spread between the two. So that's something
Yeah.
to watch.
And exports were just a little bit better this morning, so that's a little encouraging. What about the hog market? Of course, we're a little firmer here this morning, but we are going into the Hogs and Pigs report. And of course, there's a lot of talk about maybe some contraction showing up there, right?
Yeah, a little bit. And, the traders did grow a little bit cautious ahead of the quarterly Hogs and Pigs report. We were feeling pretty good on that hog complex about last Wednesday. And then Thursday and Friday, we saw just massive sell off through a lot of commodities, like we mentioned after the Fed's news on Wednesday. And so they did pull out a little bit ahead of this H&P report. And so, like you said, we're supposed to see a little bit of contraction there, which we haven't really seen yet in the Hogs and Pigs report. They may go back and revise some of the other ones. We'll see. But at this point, it does look like production's going to be down just a smidge. So not expecting a whole lot out of this report when it looks for kept for breeding at 98.7, or whether it was all supply at 99.2, somewhere around there. But when I look at one of the big factors in it that I want to watch going forward would be this pigs per litter. That looks like it's actually picked up a little bit.
Okay.
So probably health reasons for that would be the first thing I run to, which would be a little bit more of a short term move rather than a bigger, broad, systemic, genetics, things like that, that would be improving that number. But I do want to keep an eye on that as we move through this report and many more to come.
Yeah, and that could offset some of these, I guess, lower farrowing intentions that we're kind of expecting then, right?
Exactly.
Okay. Well, we'll see what the report gives us this afternoon. Thanks for joining us. That is Mike Miner with Professional Ag Marketing and Markets Now.
Thank you.